Welcome back, everyone. Today, I am filling in for Larry Jones. You can't fill in for Stock Up with Larry Jones, but I'm going to do the best I can to bring a little knowledge about Warren Buffett and the treasuries he's been loading up on. And I want to come in here and talk about it, try to give the family a little bit more information, because if we fail to follow what these massive whales, these hedge funds, the Oracle of Omaha are doing, we may just cost ourselves a chance at making a little bit of profit when everyone else is screaming for the doors. So that's what we're going to do today. My thoughts and prayers are out to the Jones family as well as they deal with the passing of a loved one. Now, let's look and talk a little bit about what's happening out there. I pulled up this because this is Warren Buffett's current portfolio that we have. Now, he's going to be filing his forms. We're going to have a little bit more of an update coming forward, and we're going to be able to talk about this. But at this particular moment in time, you can see he sold half of his Apple shares. This is a big one, and that was a massive one. This made up about, I think it made up about 40% to 50% of his overall portfolio for Warren Buffett. 89 billion is what he has right now. We come down here, and he's been selling Bank of America. I haven't heard anything else about that, because if you know, here's the thing you need to know too. If you own over 10% of a company, you need to report it and publicly report it. And he hasn't had any reports out that I know of, so he's probably slowed down a little bit. But the big thing I want to talk about in this video is the idea of where Warren Buffett is moving his money. Why is he moving it there? And what can we do? Can we piggyback this a little bit? So I'm going to give you guys some plays, and we'll see if we get the thumbs up from Stock Up with Larry Jones, but I think he would approve of these. So here we go. Warren Buffett has moved his money $276 billion with a B. That's $250 billion into treasuries. I would say cash-like securities. Could be cash, treasuries, everything else. So this is massive. And from what we're hearing is that he actually owns more treasuries than the actual United States of America has, that they have in their accounts. So that is crazy to read. But that's where I want to get into this a little bit. So we're going to pull up a little bit of what we got here. I want to show everyone what's going on. So there's a few of them that you can do. And the easiest one, of course, is T-bill. And you might say, well, what is, T-bill dividend history? There you go. Perfect. So this is the one I kind of want you to take a look at and understand why he moves money into these plays. Look at the risk-free money he is making. Right now, this pays out monthly. So you divide this by 12, you get your monthly payment. It annualizes to 5.23. If you do compounding interest, I'm talking about taking the interest, buying more T-bill, you can do even better. That's what old Warren Buffett himself says is the eighth wonder of the world is compound interest. And so T-bill is this 3-month, and this is ticker symbol TBIL, which gives you a chance. And this is for people that say, look, I don't think the Fed's going to cut right away. I think they're going to hold longer. I just don't want to take any risk. I don't know if the stock market's going to crash. I think it's going to crash. So if you think the market's kind of topping out and you want to move your money somewhere where you continue to get some gains with basically zero risk, the only risk you get here is if the government doesn't pay their bills. And we know if that happened, the entire economy would collapse. So 5.23% yield right now, risk-free. This is what I'm talking about. When I say risk-free, that is taking, in fact, that the government will pay their bills. Risk-free. So there you go. And if you put in, what did we put in there? $100,000 at the end of the year, you're going to have over $5,000 from the dividend payments, which is good. Now, this is going to change as the Fed starts to cut rates, but the question is when? When will they cut the rates? And there's other plays that you can get into. Now, we showed you this, and you can say, show me a little example. And as the yields start to drop a little bit, and even though it looks like it's moving a lot, it's really not. Look at this. The price of the share, $50.10. It goes down to roughly $49.85, and it just floats between there. The drop is when you get paid at the end of the first of the month for your dividend payment, dividend payment, dividend payment, dividend payment, dividend payment, and it works its way back up. So this gives you a great monthly payment that you can use moving forward for those who are like, hey, I want to put it somewhere where I get a little bit of a monthly payment. This is one of those ways. T-bill, absolutely one of my favorite ones. Now, I've been switching it up a little bit, and I kind of want to talk about this and share this with you all. Now, T-bill's a nice one. You get a little bit more of an interest rate, right? But I like UTWO as well. And UTWO is a very interesting play. Even though this looks like a ton, right? It does look like a ton. Look at it. It's all over the place over the year. Unlike the other one, well, is it 48.60 all the way down to 47.60? It's only a change of $1 in here. And the idea is, why has it been running, Mo? What's going on with this? Well, this is the two-year note ETF, all right? And so as you look at this, if the Fed, I'm just going to get right to the point here. If the Fed starts to lower rates, the yields on the 2-year should fall very closely with what the Fed's doing. So if the Fed continues to start dropping rates, we should be able to see that play out. And I'm going to pull this up 1 second. Just bear with me. There we go. So that should play out in terms of the yields dropping, and you should get a price appreciation on UTWO. It's actually a great play, but it only pays roughly, I think, close to 4% interest. So you're not getting 5.2, but you're getting 4. But the price appreciation for this one should be much better. And so if you come in here and say, by the end of this year, what are we asking for? Well, we're looking at about 3 rate cuts, 50% chance, we'll say, and over 50% chance for 4 or more rate cuts. So no one knows for sure. They're gonna, let's be honest, the Fed said 3 rate cuts this year. That's what I would go with until the Fed says anything different. We all expect the first rate cut to happen in September. The data continues to point to that. 1 in 4 chance of 50 basis points, 3 out of 4 chance of 25 basis points. So that's what we're looking at right now. So by the end of September, and here's the deal, you can look at this and say, what do we got? 325 basis points is the midpoint right now compared to that. So 200 basis points worth of cuts by September 2025. So if you play the long game on this and you want to go ahead and get a little bit of a low risk, long-term play, you can look at UTWO, and say, look, it's going to drop by about 200 basis points, pushing the yields down and thus the price up for something like UTWO. Also, and that's just for this one, and you can say, well, it looks like a big change, but look, it's not like it's massive. You can see it's only up 1.54 on that huge run. The idea is once the Fed starts to cut, the yields for that 2-year will drop and the price will start to go up. To give you an example here, you'll see this is a rather new treasury, or I should say ETF. So look at this, you can see it ran about 2-point-something%, but even over all this dropping, which is one of the biggest bear markets in the history of treasuries, it was only down 3%. And you got paid 4% or higher on your interest. So from moving forward, and this is during quantitative tightening, once we get into quantitative easing, that means the Fed starts to cut rates. This will go back up. And so you get that appreciation in price and you get the interest on it, probably between 3 and 4% annualized. And then, of course, the price appreciation. My opinion is this is the safest out of all the places to keep your money at this particular moment in time. That's just my opinion. Now, what happens if you want to make a little bit more money? Well, you go a little bit longer dated. Now, this is one that got hit today, but I want to tell you something. I should say, if you look at this over the last month, 4.57. Now, this is a longer dated treasury. This is made up of 20 and 30-year treasuries. And as it goes, they put them in here. You can see it's up 4.57. Why? Because the longer the date on these treasuries, the more interest rate sensitive they are. In other words, if the Fed drops rates, these things move more. If the Fed raises rates, these things get hit hard. So, for example, you can see the latest data came out, and look what happened. Absolutely got smoked because the data was strong, saying, hey, maybe we don't need as many rate cuts right away. So it's not like, oh, this is going to collapse. Now, what it's saying is to fully benefit from the rate cuts, it might take longer. And so all that gets priced in through the month. And you can see this. Well, hey, lots of rate cuts are going to happen. That was during the whole carry trade unwinding. And then all of a sudden it's like, hey, it's not as bad. So it drops. And then the data comes out, hey, things are getting a little uglier again. They might have to cut a little bit quicker. It goes up. Hey, the data for retail spending was pretty good. It goes down. And overall, you see the trend continues up because we are getting closer to the Fed starting to cut. So this is going to move a lot more. And then you could say, and if you looked, I think it was Northwestern Mutual put in $2.7 billion into TLT. And this is owned by BlackRock. And so they did that because they did their whole, if in a year it drops by 100 basis points, the Fed, they see good things happening where you can get a nice return, maybe even up to 10 to 15% return, relatively risk-free. There's always the chance that inflation roars back and we get hammered on this. But if you believe inflation is going to continue down in a slow trend and things are okay, this is a solid play. But they did say if the Fed raises rates by 100 basis points, they would probably lose about 2% on this play over that year time. That's not a bad risk reward, is it? And so a lot of people like the interest rate of over 3%, plus the ability to go ahead and make some nice money on this. So that's what we're looking at. Now, for those who are wild like me, for the TMF family out there, and put it in the comments out there. You know, I know a lot of people see this and are like, oh my God, look at this, down 2.53% today. What's going on? Well, here you go, 13.25% over the last month. This one moves about 3 times what TLT does. So it's the same thing as TLT with 3 times losses or 3 times gains. And just to show everybody this, to make sure you can see it, over the last month, 4.57, and then we do TMF, which you can see this is up 13.25% for that same month. So you're going to get about 3 times the action on this, but the costs are more for this. That is always expensive when you're using leverage, so it could cost you 5% or more in fees annually. The goal is to make a lot of money quick if you think the Fed's going to be doing a certain thing over that time, and that's the goal. That's the goal. So you see Warren Buffett doing his thing, moving things around, and the reason being that there's a lot of valuation issues in this market. It's way overvalued. Look at the Buffett indicator, which is named after him, and it is almost 100% overvalued in the market. And I'm sure that scares him. So a lot of money will move into a low risk position because if everything kind of collapses in the next 6 months to a year, Warren Buffett's going to look like a genius. And remember, that's the guy that started with $1,000 per. That's what he started with, $1,000, and he ended up turning it into tens of billions of dollars. So keep that in mind. I'm not one here to fight Warren Buffett when it comes to his strategies, so much so that I have been moving a lot of my money into treasuries as well, not because of him, but I see the same data points he does. So there you go, family. Take a minute, thoughts and prayers out to the Jones family. I do appreciate him allowing me on his channel to share some of the things I look at with the community. I appreciate everyone stopping by. Let's get out there and make some money.